Hi, everyone. Thanks for tuning in to episode 22 of Takeaways. My name is Patrick Searcy. I'm the director of marketing for ALN Apartment Data, and I'm joined by the star of the show, the well-traveled and senior market analyst of ALN Apartment Data, Jordan Brooks. Jordan, how are you?
I'm great, Patrick. Enjoying some time at home. How are you?
I'm doing well. I'm enjoying the warmer weather here in Texas until it gets super hot. Until
Yeah,
then,
about 3 days.
yeah, 3 days. That's right. But until then, we're talking about the article from the May newsletter. It's called Rent Growth Has Decoupled from Apartment Demand. So let's start by talking about the mention in the article about April decline in the size of the labor force. How did that compare to the decline, other recent decline, and what's typically happened in the following months?
Well, the monthly decline for April was about 360,000 people out of the labor force. The unemployment rate didn't change, and so the labor force would include employed people and those that are actively looking for jobs. So this was the largest monthly decline since January of 2021, larger than the two most recent monthly declines. And there's been kind of a split. If you look at the month after a monthly decline in the labor force size, three out of the last five that following month more than made up for the previous month's loss. So, it'll be interesting to see when the May numbers come out, whether that holds true in this case, and the May increase will make up for the April loss, or whether we're going to be seeing a little bit more of a sustained kind of softening of the labor force numbers.
When you talk about producer and consumer side inflation in the article, what are some of the details below those headline numbers and how has inflation affected wage growth?
Well, inflation is obviously a huge topic right now, and so as you mentioned in the newsletter, we really broke it down to look really specifically at the producer side and then also at the consumer side. The producer inflation tends to be a little bit of a leading indicator for the consumer inflation. As the producer inflation occurs, that kind of trickles down into the consumer side. So um, really the producer inflation has continued to trend upward. The most recent data was about 11% up year over year on the producer side. And obviously, the big categories there would be things like energy and transportation and warehousing, which of course affects our industry. And then on the consumer side, same thing, that the trend has continued up, not quite the same trajectory, but the most recent data was about 8.5% up year over year for consumer price index. And again, the producer side tends to be a little bit of a leading indicator. So with the producer side continuing upward, we would expect the consumer side to to continue, at least to remain pretty elevated, if not continue to grow. In terms of wages, if you just look at sort of overall wage growth, what they call nominal wage growth, which is not inflation adjusted, over the last 12 months, we're in positive territory, up about 5% in the last 12 months. When you bring in inflation into that, though, and you look at real wage growth, as it's called, we're actually in negative territory. Wage growth has been negative over the last 12 months when accounting for inflation. So this is something that's really taking a toll for sure in terms of dollars in people's bank accounts and budgets and things like that. And then of course we have to keep in mind too the changes to the child tax credit that was expanded during COVID, the stimulus payments, et cetera. I think the financial picture has changed quite a bit in the same period of time in which we've seen really strong rent growth in the industry.
Yeah, and lots of people are feeling that at pretty much all levels. It's all you can really hear about from people when you're speaking with them. Now turning over to rent growth, the title of the article is Rent Growth is Decoupled from Apartment Demand. What has that growth looked like, aside from just the 12-month numbers? And tell us what you mean by that title.
Well, yeah, just for some kind of broader context, the last 12 months, we've seen average effective rent nationally rise by about 16%. And at ALN, we're measuring the price of a new lease. If a resident walks in and or potential resident walks in and asks about rents, that's what we're tracking. We're not getting the renewal rates in there, which will skew that number a little bit higher. If we had the renewal rates in there, it would be a bit below 16%. But for new leases, we've seen 16% growth over the last 12 months, just on a year-to-date basis, kind of through the end of April. So the first third of the year, average effective rent is up about 4% nationally. And the title of the article really is speaking to kind of a shift in dynamics in the industry, where last year we saw really explosive apartment demand was kind of fueling the rent growth. This year, again, through April, apartment demand is down about 70% compared to last year. And yet the rent growth is still kind of continuing unabated. And in fact, rent growth on a sort of month over month basis slowed down in the winter, as is typical. But then even as apartment demand continued to soften, the rent growth picked back up, and we've now had 2 months in a row of national effective rent growth above 1%. So, demand is kind of trending downward, and rent growth is back to trending upward. And that's kind of the thinking behind the title.
Well, the summer months may be starting to heat up, but we're cooling down our events a little bit in June with only 2 trade shows coming up. We'll be in booth 69 at the First Coast Apartment Association trade show. That's in Jacksonville, Florida. That's coming up. And we'll also be exhibiting in booth 1823 at a little show in San Diego called Apartmentalize. That's the National Apartment Association trade show. That's the June 22nd through the 24th, I believe. We're talking with multifamily professionals there about the upcoming launch of the next evolution in multifamily data research. We're working on an all new version of ALN Online. It's built specifically for owner management, acquisitions, dispositions, development, brokers, lenders, and more. That's going to be at booth 1823. Make sure you stop by and see us. Jordan, what about you? What do you have that's coming up next?
I have, before this goes out, I guess I'll be at the State of the Market in Orlando on May 19th. But then May 24th, I'll be in Los Angeles for the IPME 2022 Expo. And then June 9th, I'll be at the Bay Area Apartment Association, my new home turf here, at their Education Expo.
You get some more time at home then, it looks like, after that. For you.
Yeah, a little bit of a break in June, which is nice. We've got all the NAA action ramping up, so it'll be a busy month for the industry, but a little bit of a break for me.
That sounds great. Well, keep an eye on our social media for more info on what ALN is doing, what Jordan's doing, and what's coming out on the blog. You can go to alndata.com/blog for all of our new written content, and you can also follow us on Twitter at ALN APT Data, or search for ALN Apartment Data on Facebook or LinkedIn. And make sure that you're also subscribed to our YouTube channel. Click that bell for the notifications so you don't miss out on any of our new video content on YouTube. Jordan, thanks again for joining us this month for Takeaways, episode 22. Excellent article, and I look forward to chatting with you next month.
Thanks, Patrick. See you next month.